If a loved one passes away with a mortgage on their home, you might be wondering if you have to sell that property or worry about the bank taking action on it. This is actually one of the most misunderstood situations in real estate, so today let's get you in the know. I'm Justin Brown, mortgage pro, real estate investor, and I've been doing this a very long time, so here's exactly what you need to know. There are so many questions around this, right? Does the bank take back the property? Should you bother calling the lender? Do you have to worry about probate? Well, let's go over the key things you should know to protect that home. Whether you're facing this situation now or just planning ahead for the future, understanding the steps you should take is important to save you a lot of stress, time, and money. First off, if you have a loved one with a mortgage and they don't already have this, you need to have them set up a trust. Now, I don't know about every state, but especially in California, because if somebody passes away with a will and not a trust, it has to go through probate. But if the home is in a trust, it could help you avoid probate completely, which is huge. Now, probate is long and expensive. Plus, during that time, someone still has to make that mortgage payment. So if you're not living in that home, that adds up quick. And on top of that, you're going to have attorney fees, and the executor is going to be charging fees as well. But a trust will help bypass all that. So if you're planning ahead, this is your sign to go ahead and get that set up now. Now, let's talk about what actually happens to the mortgages. And there's two different types of mortgages to take into consideration here. One is a reverse mortgage. If the property's in a reverse mortgage, you're going to have 6 months to either refinance or 12 months to sell that property. It's the type of loan that when the person who's on that reverse mortgage passes away or no longer lives in that home, that money is due. So if this applies to you, you need to make a note and make sure you're prepared on how you're going to handle that. Now, the good news is if the property's on a regular mortgage, not a reverse mortgage, there's no acceleration clause. The loan does not have to be paid off when the person passes away or no longer lives in the home. Basically, you just need to keep making the payments while you're figuring it all out because nobody's coming after the home as long as it's being paid for. Now, here's how you could actually take control of that mortgage and get information from the mortgage company on that property. Now, you're going to be able to access the mortgage or take over the mortgage by either being an heir or an executor of the estate. Now, if you're the heir to the property or the estate, you need to call the mortgage company and ask to be added as the successor in interest. Now, this not only gives you the power to get information on that loan, but also make payment arrangements and even modify it if it's not affordable. And what's great about this is after you get added as a successor in interest, you're still not personally liable for that mortgage. So it's not going to hit your credit score, but you'll still get access to everything just like the original mortgage holder. Now, if you're not the heir, but you're the executor, you could still get added as an authorized third party handling the estate. Basically, so you're still able to get access to get all the loan info, like the payoff, what payments are due, how much to catch it up if you need to. Now, if there's other heirs involved in this and you're trying to figure out your buyout options, make sure to check my video on how to buy somebody out of a mortgage that I'll tag here. So just know when a loved one passes with a mortgage, you have options. Stay on top of the mortgage payments, make sure to get yourself added as a successor in interest or an executor to the estate, and don't forget to like and subscribe for more of the real and real estate.